Hello guys and welcome to Alan's Investment Journey channel, and I want to discuss with you the Canadian ETF, which gives us the best exposure to the US dividend growth stocks in my opinion, which is VGG or US Dividend Appreciation Index ETF. I feel like this ETF provides with a perfect blend of both dividend growth and value appreciation Canadian dollar can ever get you. I found this ETF while looking for a US market dividend fund where I can invest in Canadian dollars because I simply don't feel comfortable paying commission for a currency exchange. If you're like me, maybe this fund will be interesting for you as well. This ETF is designed to track the performance of the US Dividend Appreciation Index. This index includes companies with a history of increasing their dividends year after year for at least past decade. I feel like this is a great selection method because ability to consistently grow the dividend is an indication that companies thrive in, and of course everyone wants to have such companies in their portfolios. Top 10 holdings of this ETF include companies like Visa, MasterCard, Microsoft, Apple, and Costco, which I really love, and I have some positions in the stocks as individual holdings. Also, I appreciate the fact that there is no single stock dominating in this ETF. There is no holding which has weight of more than 4.5%, which gives me better diversification. Of course, the main reason why I chose this ETF as a US market dividend exposure for myself is a stunning performance which was shown first of all because of high exposure to the tech sector. Most of US dividend ETFs concentrate on financial sector because of high yields, but I personally prefer tech because of higher returns. Of course, it comes with a risk, but I'm okay with that. Just look at these numbers. Year to date, it's up 12.5%. 1 year return, 16.22%. 65% within last 5 years, and stunning 260% since inception in 2013. If you compare it with another US dividend ETF represented in Canadian market, like ZDY from Bank of Montreal, it's clearly lagging behind VGG ETF. And I guess there is no sense to compare with VDY, which is in my opinion the best dividends ETF oriented in Canadian market. There is a huge difference in the performance. Although the yield of VGG is not huge, it's only 1.25%, but the dividend growth rate is almost 14% annually for the last several years, which gives high hopes that dividend income from this ETF will substantially increase while I'm holding it. I wanted also to mention some cons of this ETF. First of all, it's hedged to Canadian dollar. I personally prefer unhedged investments to the US securities because Canadian dollar tends to weaken comparing to the US currency. Also, hedging results into higher management expense ratio of 0.31%, which is slightly higher than I want to. And lastly, this ETF might not be for everyone. For example, if you have VFV as a core holding of your portfolio, VGG or VIG as it's named originally in the US market has 50% overlap with an S&P 500 index. Overlap with Nasdaq 100 is also pretty high, with 26 stocks from 100 being present in both ETFs. I'm personally fine with that because most overlapping companies I like anyway, and I don't mind double down on them. However, it definitely might not be perfect fit for your investment strategy. I just started building my position in this ETF last week and hope to grow it to at least 10% of my overall portfolio pretty soon, especially considering current discounts on the stock market. Let me know what you think of VGG and if you have it on your portfolio or in your investment radars, or what is your favorite dividend ETFs? Drop a comment on a comment section below, and of course, have a good one.